The MicroStrategy Inc. Class A stock, ticker MSTR, is currently trading at $204.02, representing a substantial drop of -$4.52 or -2.17% in today's intraday trading. That move is significant, and it immediately pushes us past the surface-level narrative. You see, the common expectation is that MicroStrategy acts as a high-octane proxy for Bitcoin. When Bitcoin moves up, MSTR screams higher. When Bitcoin pulls back, MSTR exaggerates the fall. Today's price action seems to confirm that expectation, with crypto-linked stocks generally under pressure as Bitcoin has also seen a decline. However, the insight you need to focus on is that this stock's drop is not just a reflection of the digital assets dip, it is also a direct and magnified reaction to the underlying capital structure decisions the company has been making, particularly its aggressive use of perpetual preferred stock offerings to fund its latest Bitcoin purchases. This dynamic introduces a more complex and, frankly, more acute risk profile that goes beyond mere crypto volatility, and most retail investors focusing on the daily Bitcoin price miss this essential distinction. The general belief about MicroStrategy is straightforward. It's an enterprise software company with a massive, leveraged Bitcoin treasury, essentially a corporate vehicle for Bitcoin exposure. For those who don't want the hassle of direct crypto custody or are restricted to holding securities in an individual brokerage account or their retirement funds, MSTR serves as an easy, albeit volatile, alternative. This narrative has given the stock a massive premium over its net asset value, or NAV, the market value of its Bitcoin holdings minus its debt. But the reality is that the stock's market capitalization has recently slipped closer to, and at times briefly below, the value of its core Bitcoin treasury, a significant shift from the substantial premium it has historically enjoyed. This compression suggests the market is starting to price in a higher degree of corporate or financing risk, or simply becoming more efficient at valuing the underlying asset versus the leveraged wrapper. We saw a spike in trading volume yesterday, carrying over into today, which is often a sign of institutional position adjustments or heightened short seller activity capitalizing on this premium compression. The stock's current level, near its 52-week low, puts a spotlight on the sheer velocity of the decline, which has been much sharper than the dip in Bitcoin itself, reinforcing the leveraged nature and the heightened sensitivity to market-wide risk aversion. Institutional activity is always key with MSTR, and recent SEC filings show some fascinating and often contradictory moves. While major passive funds like Vanguard Group and BlackRock maintain large, static positions driven by index tracking, the real action is in the more active institutional and hedge fund world. You see significant movements in and out. Some large institutions have been increasing their long positions, betting that the long-term Bitcoin thesis will overcome short-term financing concerns, while others, particularly those engaging in complex option strategies and short selling, have been actively pressuring the stock. The high short interest, with recent option activity showing a focus on bearish put options, indicates that a considerable part of the market sees the premium as unsustainable, viewing the entire arrangement as a high-risk carry trade. This constant tug-of-war between long-term digital asset conviction and short-term capital structure risk is what generates the immense daily volatility that makes MSTR a day trader's delight and a long-term investor's anxiety generator. This is a very different psychological profile than what you might find with stable, dividend-paying stocks or even large-cap tech names like Apple stock or Tesla stock. Now, let's take a quick look at the core business, the often forgotten enterprise analytics and mobility software segment. MicroStrategy, at its heart, is a decades-old business intelligence software firm. They design, develop, market, and sell software platforms and services that help companies analyze large amounts of data to make business decisions. Think of it as competing in the same general ecosystem as other large data and software providers. However, the reality is that the software business has been overshadowed, both in terms of revenue contribution and investor focus, by the Bitcoin treasury strategy. While their recent Q3 2025 earnings actually showed respectable results, with net income exceeding estimates largely due to a positive change in the carrying value of their Bitcoin, the software revenue itself hasn't been a growth driver for years, reporting a revenue decline over the past few years. For any investor evaluating MicroStrategy, you are primarily buying a leveraged exposure to Bitcoin, with a legacy software business providing a minimal but cash-generating operational base. The real story continues to be the capital market strategy. The firm has consistently used two main methods to fund its massive Bitcoin purchases: issuing convertible debt notes and issuing equity, including the recent perpetual preferred stocks. The convertible notes offer a low-cost, virtually zero coupon way to borrow, which is incredibly efficient as long as the stock price and the underlying asset, Bitcoin, continue to appreciate, allowing the debt to be paid back in highly appreciated stock rather than cash. The constant issuance of equity, particularly through at-the-market programs, allows the company to sell shares at a premium and use the proceeds to buy more Bitcoin. Executive Chairman Michael Saylor has publicly discussed this strategy as a way to generate Bitcoin yield, increasing the Bitcoin per share metric. While this is mathematically compelling if the stock consistently trades at a premium, when the market capitalization dips closer to the NAV, as we are seeing today, that yield mechanism stalls, and the dilution risk becomes much more pronounced. This is a critical factor distinguishing MSTR from a simple Bitcoin ETF or a straightforward investment in Bitcoin through an exchange like Robinhood Crypto or using a self-investing option through your individual brokerage account. Looking ahead, the future outlook for MicroStrategy is almost entirely a function of two variables: the price of Bitcoin and the market's continued willingness to grant MSTR a premium for its leveraged structure. On the Bitcoin side, catalysts include the possibility of regulatory clarity in various jurisdictions, institutional adoption, particularly in products like Fidelity ETFs or offerings from interactive brokers, and the next Bitcoin halving event, which is always an anticipated moment. A sharp, sustained rally in the digital asset would immediately alleviate all the pressure on MSTR's stock price and restore its premium, vindicating the leveraged strategy. Conversely, a deep or prolonged crypto winter would expose the debt structure to greater risk. Saylor has maintained that the company's capital structure is designed to withstand a significant drawdown, but that doesn't mean shareholders won't endure immense paper losses and volatility. The risk side is not just the price of Bitcoin, it's the cost of that leverage. The market is now keenly sensitive to every new issuance, judging whether the capital raise is accretive or dilutive at the time of the announcement. This is where the tension between expectation and reality is most pronounced. The expectation is that MicroStrategy is a pure Bitcoin bull play. The reality is that it's a financial engineering firm with a software side, and its stock is a function of Bitcoin's price multiplied by the market's shifting appetite for financial leverage. The fact that the stock is now testing new lows, even after the company announced its latest Bitcoin purchases, suggests that the market is currently more concerned with the mechanism of acquisition, the perpetual preferred stocks, than the acquisition itself. This is a subtle but powerful signal of investor caution. For those of you managing your own assets, whether through a platform like Schwab Intelligent Portfolios, looking for investment help, or actively using a Fidelity trading platform or the SoFi Invest app, the MicroStrategy stock represents a clear-cut example of high-conviction, high-volatility self-investing. It's not a core position for the average intelligent portfolio, but it's a pure macro play for those with a strong stomach for risk. I'm genuinely curious about your perspective on this kind of leveraged equity structure. Comment below and tell me, do you think MicroStrategy's strategy of continually issuing debt and equity to buy more Bitcoin is a brilliant long-term mechanism to maximize Bitcoin per share, or is it a short-term gamble that exposes the company and its shareholders to undue financial risk? To summarize, the market's expectation is that MicroStrategy stock simply mirrors Bitcoin with extra volatility. The deeper reality, the one we've uncovered today, is that the stock's recent steep drop, despite Bitcoin's relatively contained decline, points to a fundamental repricing of the corporate premium. Investors are focusing on the financial engineering, the dilution from equity raises, and the burden of debt financing more than the immediate crypto movement. The stock has been pulled back to a critical support level driven by high institutional short interest and general market